everyone. It's your favorite podcast family. This is Gentleman Style Podcast Show, and we have the incredible, the amazing Miss Karmea Wells, the unorthodox Southern Belle, and myself, your favorite host, Marcus Norman, the gentleman. And we have on the stage with us the incredible, the amazing, the tax business strategy, business mogul. You know her, you love her, you all have seen her on the show before. We had to bring her back. This is our pop-up show. We're going to talk about the money. Taxes, everybody's favorite time of year. Mm-hmm. And we love to see it. We love to see her, and we had to get her back on the show. So here we go. Hey everybody, it's your favorite host, Marcus Norman, and Gentleman Style Podcast Show, and Karmea Wells, the unorthodox Southern Belle, and we have the amazing business strategist, tax professional, mother, entrepreneur. You guys gotta follow this woman. This woman is absolutely stunning. She is changing the absolute game. She's a business mogul. I follow her. I stalk her social media page because she is doing what most of us should be doing. She just bought how many acres? 40 acres and a mule? Well, how many acres, Miss Lee?
50.
50 acres. She just bought some real estate, y'all.
Yes,
Super woman, super mom. And we're going to talk about taxes today on the show. And I couldn't think of anybody better to help us bring in this new year and a business professional herself. Miss Leora, how you doing?
I'm doing so good. I'm so excited to be here with you guys. I really enjoy your podcast and the love and support that you show, and just you guys getting that information out there to people. I love it.
Absolutely. We love you, and we appreciate you for all the work you do currently. And like I said, I stalk your social media page. You and what you're doing is so incredible. You're talking business. And here's the thing, y'all. She comes from the healthcare industry. 15 years. She's a mother. She got, is it 9 kids now?
I have 10 kids.
10 kids, y'all. And she's still getting it done. But the important thing I want to point out about Miss Israel is she's a business strategist. She's a real estate agent, and she's a credit repair specialist. So she is very all-encompassing, and she can help you do all of it with your business. So when you're doing the taxes, and that's the problem with taxes, right? The common problem that you see is you don't want someone who's going to just hand you a profit and loss statement and say, here you go, file your TurboTax, you're good to go. You need an actual strategist that can help you plan for the future and help you make those executive high-level position decisions. And that's what Miss Israel is all about. How am I doing? Am I way off here?
No, you're not off at all. You're doing good. You're absolutely right. People need, when you're a business owner, there's a level of expertise that you need to have from the person who is helping you with your taxes. Anybody can prepare taxes, but it takes a true expert to actually be able to apply the tax code to your situation and lower your liability. My motto is never pay more than your fair share.
I love it. Facts. Yeah. Miss Israel, there's been some changes. One of the biggest changes every year. Every year. I want to ask the question. What is I've seen this, and I need you to clarify it. There's been a change with Cash App, Zelle, and PayPal. And for entrepreneurs like myself, I know my barber, a lot of barbers, a lot of cosmetologists, a lot of hairstylists, they all operate off of the Cash App, Zelle, PayPal system. What are some of the changes this year specifically in regards to Cash App, Zelle, and PayPal, and why is that significant for 1099s specifically who want to operate all cash?
Right. So you got to think about this. Why is it that people, mostly the majority of people, why do they want to operate all cash, right? A lot of the times it's so that they don't have to report all of their income. So that's the biggest reason why I find that people don't want to, you know, go through like bank account or whatever. They mostly want to like keep it as under the table as they can. And the IRS has caught on to that. And that's why they implemented that law that, you know, these payment processors have to submit a 1099 or a 1099 reporting the income that's being paid out to their users. So with that, they're also trying to stop, you know, some money laundering. So it kind of like goes into the Corporate Transparency Act as well. But yeah, that's essentially, you know, what they're trying to do is track every dollar. Even though since the beginning of time, banks have been in compliance with reporting what's in your bank account. And this is another reason why I feel like the government is moving from a cash society and going more digital with everything. It's just so much easier to track.
So why the sudden change do you feel in your professional opinion? Why do you
Mhm.
feel the government wants to track every dime that you make as a professional? It's my money. I
Right.
worked it. I made the money. What's the deal?
I mean, it's the cost of doing business is paying taxes, you know. It's yes, it's your money, but it's the government that we have set up in this country. I mean, it's not really much that we can do about it outside of your elected officials. It's, you know, the finances is used to make the country go around, to fund all sorts of things, education, infrastructure, just all kind of stuff. Military. So, you know, a lot of people do find it their patriotic duty to pay their taxes. But again, my motto is you should never pay more than your fair share. And a lot of people actually don't know that um, you can report your income and you can feel safe about reporting your income. The
All your
tax
income?
code is there. Yeah, all income. The tax code is there to help you minimize whatever your liability is going to be. But that's why it's very important to work with a professional who is skilled and knowledgeable in reducing that liability and using the tax code for your benefit. Um, so yeah.
So that's huge, right? And so I was just about to ask you, how do I? What are some tips, some strategies that I can prevent paying all this taxes? Right? How do I? What are some strategies that you recommend to your clients to save
Mhm.
on how much money? Because that's an interest free loan. I'm giving the government my money for an entire year to just do what they want, send it overseas, send it to, fund this organization, help out this third world country, do this, do that, and they give it back to you during tax season. Oh, thank you so much, thank you for the interest free loan, here's your money back. So what can I do to minimize me paying so much to the government? Because I've heard some mothers, they getting like $15,000 refunds and stuff, and I'm like, I need some kids. I need to borrow. Can I borrow one of the 10 kids?
Oh,
I need
listen, we
some.
need all that. All that's needed. Um, so I think what you're getting confused. So the interest-free loan thing, um, taxes is a fiscal responsibility for all of us. Okay. You have different classes of, you know, taxpayers. You have lower income and wage earners, and you have business owners, you have corporations. So you have different things that you have to consider. The ones that are giving the government those interest-free loans are wage earners. So if you work for someone, you have a 9 to 5, you get a W-2 at the end of the year. Those are the ones that are giving the government the loans, not the businesses. The businesses, whether you're an independent contractor, LLC, corporation, whatever, you're just paying your taxes. You are taking care of a fiscal responsibility. That's it. It's not a loan or anything like that. It's you owe this to the government and that's that. So depending on where your tax bracket falls as a wage earner, that's how you determine on whether you're just going to owe the money or is the government going to return it to you. Does that make sense?
It does. It
And that's
absolutely does.
dependent, yeah, that's depending on if you've actually paid out throughout the year. So if you've had those federal tax deductions from your paycheck, if you've paid out, then that's what they're returning from you, whether it's just a percentage, whether it's all of it. It just 100% depends on your total financial picture. Now, refundable credits is another thing that people get confused because a lot of the money that people are getting back is money that they've loaned to the government. Again, it depends on where you fall, where your tax bracket is, if you're even going to get it back or you just are going to owe it. Now, you have refundable credits that are geared towards people who have certain circumstances. Like if you have children, you know, there's the child tax credit, there's the child care credit, there's the additional child tax credit. If you have other dependents, it doesn't necessarily have to be a child. It could be, you know, I've had boyfriends claim girlfriends and, you know, yeah. If you take care of yeah. If you've taken care of a family member, you have a parent that you know, depends on you. So, you know, if you have dependents, there's some refundable credit for that. And the refundable credit is, okay, you're more lower income. So we're going to give you some additional money or lower your tax liability a little more because you have this going on in your life. The same thing for the educational credits and the EITC, so which is the earned income tax credit. That's definitely for low income people. So that is the free money. Though most of those credits are the free money. Outside of that, everything else is just lowering your tax liability. So
Off of your
I see.
Yeah.
I see the comments, and Standard Read asked a question about, do you have any advice about crypto and taxes?
About crypto and taxes. So when it comes to crypto, it really depends. Like the IRS looks at it from a couple different angles. Number one is an investment. It's either going to be long-term or short-term, like almost any investments, the same way as the stock market and real estate. And then it's going to, like if you are a minor, that's more so looked at as like a business versus an investment. So it just really depends. So if you're just investing in cryptocurrency is subject to capital gains tax. And that capital gains is going to be based on whether you've held it for a long term or you've held it for a short term or you flip or whatever the case may be.
I hope that answers your question, Mr. Reed.
Yeah. Now, when it comes to crypto, like I said, there's no like specific tax codes to lower your capital gains. Your capital gains is going to be either the 15 or the 20%. And then how much you are going to be paying is going to be completely dependent on how much crypto you have. So there's not a lot of wiggle room there.
And speaking of wiggle room, since you brought it up, I want to bring up a question. What I need your help. What can I do to what can I do with the least amount of taxes, pay the least amount of taxes without going to jail? Because here's why. Here's the question. Here's the reason why. Because a couple years ago, ex-president Donald Trump, the man publicly said he pays zero taxes, and he's wealthy, right? That's what our ex-president said. He don't pay zero taxes. So what can you get me down to zero taxes without going to jail?
It depends. See, the difference between me, you, and Donald Trump is Donald Trump likes to spend money. Now, don't get me wrong, because we are definitely a consuming class, you know, but the way that he's able to pay $0 in taxes is because he has some of the best tax accountants on the planet, number one. So he invests in the people who have the knowledge.
That's
So
a
that's
lie.
number one.
That's a lie because he don't have you.
Well, he don't got me. You know, and the thing I interviewed, and I'm just like, well, what the heck did I do? Like, you know, I don't know. Maybe it was this.
Oh,
Um,
you're right.
yeah. So he, and don't get me wrong, a lot of the laws and everything that he put in place have been magnificent for business owners. But he invests. He spends his money. He does not keep his money in his bank accounts. And that's the difference between us, the working class, and the rich. They spend money. So, and this is a huge issue that I see, right? When I'm working with people, like last week alone, I met with so many different business owners that came to me for tax planning, right? So I come up with all of these genius tax plans for them. But guess what? Now you have to implement them. And implementing them means spending money to open up the IRA accounts to, or the Roths or the self-directed or whatever it is that we came up with. You have to spend the money to open those accounts. You have to take the money from your checking account and put it in those accounts and leave it there. Unless you're going to be like with the self-directed, you're going to be, making other investments, so forth, so on, but it's going to be in the name of the account, not you. You know what I mean? So I have noticed that we want money just sitting in our checking accounts. Like that's where we have an attachment issue to money. We're fine giving it to everybody that we want to, the car payments, the fancy cars, the fancy expensive houses, Fendi, Prada, Gucci, Louis, whatever, all the name brands, $2,000 on a hairstyle. We're fine doing that. But when it comes to actually doing the things that you need for, the tax strategy stuff and implementing that and spending the money on that, no, I'd rather see $6,000 sitting in my checking account versus sitting in a retirement account. That's really how people think. And it's so mind-boggling. Like, you have to invest. This is what the corporations, the people that are billionaires and CEOs and stuff, they know this. And so they do it. They give a lot of money to charity. Boom, tax deductions. Guess what? They give to charities that they care about or that they own. Then you have, they invest in the stock markets heavily. Okay. And they do pay, their taxes. Here's the thing with Donald Trump. He personally doesn't pay taxes, but his businesses do. You understand what I'm saying? His businesses do. He doesn't. His businesses do. But guess what? His businesses is paying him and funneling money through him. Do you understand what I'm saying? Especially when you're a C Corp. So there's a couple different, you're taxed like twice as a C Corp. So the business pays taxes, and then the taxes is directed down through the shareholders and is paid at that level as well. So he may not be paying taxes, but his businesses are paying taxes unless they completely maxed out on all kinds of credits and research. And there's just so many credits that you can get to benefit yourself, but you got to be willing to spend the money. And a lot of people just don't want to do that in the lower and middle classes. So
big facts.
And then real estate. Every single billionaire, millionaire, they go heavy with real estate. Why? Because real estate is a huge depreciable asset that can zero out your taxes. So,
facts. We got a question from the audience.
So
I want to ask this question, but Journey to Love TV ask, how can you prove the non-child dependent?
Well, I have another question to ask to that as well.
The taxes.
I have another.
People trying to scam.
I got another question.
Mhm.
It's not necessarily scam. Not necessarily. Because
burden of proof
I was
is
hearing
just
something go
showing.
around.
Yeah, so the burden of proof is just showing that that person actually lived with you and you provided their care. So if it's a parent, like they're elderly, they need some assistance or whatever, you may show like some of the bills that you take care of for them, or that they get mailed to your home, or you may be a power of attorney over them. Um, they can also, your dependent can write a letter for you if they're competent enough. So there is different ways. The doctor can also validate a letter for you to prove that they are under your care. So that's how you would prove a non-child dependent. If it's like a boyfriend and girlfriend, they have to write a letter. So yeah.
I got a question. This can be an opinion. Because there's a lot of people who have fur babies. So what do you happen to hear anything or see anything in the future about people trying to write off pets?
You cannot write off.
I'm being very serious.
Yes, you cannot write off a pet. The only way you could possibly write off anything related to pet or pet care is if you had some kind of business surrounding animals, or maybe your business, in your marketing material. There's a fine line there though. In your marketing material, you can say that you paid the dog or something, and
no.
He's a mascot.
But no, you cannot.
Oh,
you cannot
no.
write off any pets. It has to be a living, breathing human being with a social security number. So yeah.
So what you're saying is, what I'm hearing.
No. No.
I gotta open a veterinarian clinic, and then
something along those lines. Exactly. Yep.
Right off a pet. Huge. Leora Israel.
Because even with that, the pet being a part of the business, tax strategies is all about being creative, right? There's no specific law that says that your pet can't work for you or anything like that. You have to be very careful in how you document things. So for instance, like, let's say you go with the advertising, like, you want to appear to families, like your business niche is like families that own pets or something like that. Like you want, matching dog, you sell matching dog and owner outfits. I don't know. And you have your own pet in your marketing material. You're not going to be able to write off, that dog's food and things like that you buy. But what you can do is pay the dog owner. So it would essentially be yourself, but it has to be in a separate account. And then you use that money to take care of the dog, if that makes sense. So you have to follow some guidelines around that. And the same thing, it's pretty much the same thing when you're hiring your kids in your business too.
Love it.
So what?
Go ahead, ladies.
Oh no, my bad.
I got some fraud. I got some fraud to ask, yo.
With itemizing, what is the amount for this year, or is it still the same? I think it went up to a certain amount once Trump got in office. What is the amount that you can actually claim to itemize on your taxes?
Itemize, there's no specific amount that you can itemize. If you are eligible to itemize, you certainly can. There's not a specific number for that.
There you go.
Unless it's healthcare. Healthcare, you don't start getting deductions until you've reached that 7.5% of your total income.
See the brain? See the brain on her, y'all? So here's my semi-legal question, right? This is a partnership, right? You got two friends in business. You and me, we're in business together. We're not married. What is the best kind of like business setup, tax strategy setup for that partnership? What would you advise two business professionals going into business together, but like, how should I set that up tax wise? Is that like a LLC type deal and we're employees of the business, or is that we should have a structure where you're the CEO, I'm the CEO? Like, should we have titles to it? What is the best setup for two partners going into business? Or do you even advise two people going into business together? And it's like, no, don't do it.
I do, but I am very, very strict on making sure that your paperwork is in order. And what I mean by that is you want to make sure that, first of all, you properly form the LLC. That is the beginning process. Either the LLC or the partnership, whatever it is that you're going to file with the state. On the IRS level, you're looked at as a multi-member LLC or a partnership. Now, you have to know that, first of all, when it comes to taxes, you're going to file a separate taxes as y'all doing the business together. That spits out something called a K-1, and you take that K-1 and now you each individually prepare your personal tax returns. So you're going to have a fee to prepare the partnership return. You're going to have a fee to prepare your personal returns. The next thing is make sure that y'all have an operating agreement and some corporate bylaws that lays out all the terms of your arrangement with one another. Who's going to do what? Who's going to be in charge of this? What kind of, sort of business are you going to be? Who you're going to serve? Like, it should be very thorough and detailed, so that you know exactly how to operate your business. The next thing is going to be figuring out what your capital contributions are so that you know what your basis is in your partnership, which is super important. And I see people get this wrong all the time. They take money, out of the partnership, and nobody is tracking their basis to figure out if on a personal level you're going to have more taxes, like if you're going to be taxed more, because you can be taxed more if you have any kind of dividends that exceed your basis.
Wait. So I can't take the money that my business made. I can't take money out of the business. Like, how do I do that?
Yes. So
isn't it my money?
If you're employees of the company, meaning that you're going to be an S Corp, you're going to be a partnership, but taxed as an S Corp, you cannot take out more dividends than you have basis. If you do, you can, but if you do, you're going to be hit with automatic capital gains tax. That's the part that I see people get wrong all the time. So, and there's other rules too. Like, you have to properly be on payroll. You can't skip around that. You can't sometimes pay yourself, other times not pay yourself and just take money from the business. It doesn't work like that. So if you're going to call yourself an employee of the business, meaning you're going to be set up as an S Corp, you have to follow all the rules for that. And you have to make sure that you're tracking your basis. Now, if you're just going to remain a multi-member LLC, you still have to file that partnership return. But now you're just splitting the income based on whatever your percentages are. So if you own 30, the other person owns 70. You just split all the expenses and the income, and you take the K-1 and you file your personal returns, and then y'all are taxed separately.
So that does make sense. We got a question. So I'm like multitasking, right? Because we on live. This is live. So we on multiple platforms. So we got a question from our audience. They said, what if my partner left the partnership like in the middle of the year? Does that change anything?
You're going to track it. You're going to make sure it's they leave in accordance with your operating agreement. And you would basically just cash them out of the LLC according to how much ownership they have in it. And if there's any issues around that or any stealing or anything like that going on, then that's something completely separate. You're going to want to have, a civil suit against them.
What do you mean by cash them out? How do I cash out my partner who left the business?
Yeah. So, first of all, you're going to understand whatever your partner's basis is. Okay. Basis increases and decreases depending on the activities that you do in the business. So you're going to figure out how much they are actually owed, and then you would buy them out, or you would give them their money, and they're off of the partnership, off of the business. So that's what I mean.
Super dope. Super dope. Woo! Woo! This is powerful. This is huge. This is huge.
So
Go ahead. Go ahead, Karmea.
I have a question regarding, the Cash App, Zelle, PayPal, those apps.
Mm-hmm.
So if you're getting a large amount of money through the year, what is the amount before you're starting to get flagged, and what is getting flagged under the RS? Like what happens?
So these platforms have a reporting requirement. If they've paid out someone more than that $600 threshold, they're going to send you a 1099. That 1099 is also at the same time being sent to the IRS. So the IRS is looking for you to report that income on your personal tax return, or your business tax return, whichever it may be. If you don't do that, that is what's going to cause an issue with the IRS if you don't report that income. Now, I do know that for 2023, because it was a lot that had to be implemented and it wasn't so easy for the businesses to track down on what expenses were business versus what expenses were personal, because most of those platforms do both. They kind of put a hold on it for this year, but for sure, like if you for sure have a business account with those platforms, they're definitely going to still issue you those 1099s. And you are responsible for also reporting that income. But
So
see, go ahead.
I was just about to ask, because I don't know if you know out here, but this is a Cash App era. So I know plenty of women who's getting continuous Cash Apps, and it's like, oh, this is my money. This is the personal money. Or even if for personal, are they going to get hit?
Possibly. And that is where we are still waiting for some interpretation from the IRS, because they are also looking towards taxing some personal as well because of the whole gift tax thing. So, there is a such thing in the US known as a gift tax. If somebody is just giving you money, that money is taxable.
Facts. Facts. There
Yeah.
you have it. There you have it. That's huge. Is there any changes to the tax brackets this season as far as the standard deductions for single, married, filing single? Any changes this year?
Yeah, so for 2023, they went up from 2022. I don't know what they are off the top of my head. It's usually about anywhere between like $200 to $500 more. But they've also increased for 2024 as well. So yes, they did go up, which is a good thing. That means that, for instance, if it's, I think married is like 25,000, something like that. Oh, there you go. Then
Help you
yeah,
out. We got you back. We got you back.
awesome. Look, see, like if it's the 29 too, so that means you don't have to pay like your income is going to be decreased by that 29 too. Now, earlier someone had asked about itemizing. When you itemize, you're usually trying to claim more personal deductions than the standard deduction allows for. So the standard deduction is just one flat rate deduction, and then you itemize if you have more personal deductions than that. So like, your mortgage insurance, mortgage premium, real estate taxes, medical expenses, energy efficient, upgrades to your home or anything like that. So yeah.
Love it. Love it. I heard from the grapevine that, and this was unique for families, for parents. What if I have a child, right? And I put money into a retirement fund for that child. I forget the name of it. Forgive me. I'm not as proficient with taxes
Like
anymore.
a custodial account. Yeah.
Yes, a custodial account. I put money into this custodial account for my child for college. It's specifically designated for college. And my child decides they're not going to go to college. Is there, what do I do when now my son or daughter that I've stashed away all this money and it's looking juicy and I want to add an extra bedroom to the house, but it's for the child to go to college and they don't want to go to college. They said, Mom, Dad, I'm going to the military. Mom, Dad, I'm gonna be a hobo, and that's what it is. What do I do?
I understand. First of all, I would encourage you to at least encourage them to go to some kind of trade or tech school, or just some kind of job training that, it may be like a 16-week program or something. If you have to pay for it, it qualifies to use, the 529 savings plan. It qualifies. But if that fails, one thing that's going to happen is you're going to have to pay back the credit out of it. Like if you cash it out and you just cash it, it's not being used for school, there's penalties and payback of the credit for it.
That hurts.
So, okay. So with that being said, because we all know children are going to feel like they're going to do what they want to do at a certain point. You doing all the saving. What would be the best way so you're not hurt as the adult on the other end? What would you say would be the best way? Just lay it out there. What would be the best option than that? So you don't hit that point where they turn 18, they're senior year, and they hit you with, I am not going to college. What do you mean you're not going? It's 50,000 in there. Excuse me?
Yeah, that's a great question. There's other ways to save for college for your kids. It can be, you can do a IRA and cash out the IRA penalty free to pay for schooling. You can invest in the stock market. You can purchase real estate and have that income from the real estate serve as what's going to pay for their college. You can do high yield savings accounts. So there are some other ways outside of just the 529 plan. But for the 529 plan, the rules are pretty much the rules. And I mean, if you take the money out and it's not being used for that, you're going to get hit with the penalties. There's no way really around it. At least not that I know of. It could be. Maybe, I don't know. It
The
might
529 plan just don't feel.
It's not
529 just don't feel. It don't feel comforting. It don't feel safe because you could do all this planning and they can get the grades. They could be straight A's and then they can hit that. I'm burnt out. I don't want to do it anymore. What?
Negro, please. Negro, please. You going to college?
Okay, so Stanley Reed says 529 are traps. I can't see anyone being money savvy using that plan.
You'll be surprised. They are pushed throughout the tax and accounting community to help people qualify instantly for tax deductions or tax credit. But I agree with you. I'm not a fan, and I don't recommend them to anybody personally. I mean, if that's what they I don't. If that's what
it's just sound like a setup.
Yeah, it can be because
you can't.
You don't really know. So I would.
You're deciding the fate.
I would rather for my kids. For me, it's the retirement. It's the Roths. It's the life insurance, and the high yield accounts.
Life insurance. Yeah. You would advise you advise your clients to put college saving funds in a life insurance policy?
I do not.
Okay.
Only because I'm not an insurance broker. That's just how I do it. I do that for me.
Oh, okay. I thought you had the keys. I mean,
but it's a good idea. But I would, that is not insurance advice, and it's not to be taken as such. Talk to your insurance professional about that. But it's a good tool for me and my family. Some of my clients are doing it, but again, they have their, financial planners as well that I work alongside with.
Super dope. What's the best way to track mileage? Business mileage, personal mileage?
The old-fashioned way, a pen and paper. Every time you get in the car, you make
spreadsheets.
You could use Excel spreadsheet. You could use apps. Apps are super easy. Super easy to download an app like Mile IQ or Hurdle, and let it do the tracking for you. And you just have to let them know, like, was this a personal trip? Was this a business trip? And that's that.
Super dope. Yeah. Super dope. That's huge. What should someone have before they set up an appointment with you and your team? what should I have already done to make it a easy and smooth tax season?
Okay, so if you're coming to us to work with us for taxes, it just really depends on the level of service that you want. If you just want tax preparation, you're going to want to, and you're a business owner, you're going to want to make sure that you have all of your bookkeeping files. So you're going to have your profit and loss statement for the whole year, your balance sheet, and so those are the two main, the profit and loss and the balance sheet. The balance sheet has to be balanced. So you're going to make sure that your bookkeeping is done, and that you have any other proof of sources of income, whether it's a 1099, a W-2, whatever the case may be. So you're going to want to make sure you have all your income documents. You're going to want to make sure that if you're a business, you have your LLC paperwork or something showing, whatever structure you have going on. You're also going to want to make sure you have information for your dependents. That stuff does have to be verified. So social security card, birth certificate, that letter from the doctor, something along those lines, letter from the school, report card. You're going to want to also make sure that you have identification for yourself. Proof of address. That identification cannot be expired. That's another thing. So it has to be up to date.
You got to be a citizen, y'all. You can't.
And you have to make sure that you completely fill out our tax organizer, which, it asks a lot of questions. So you will need about 15 to 20 minutes of sit down to really go through it. And we ask a lot of questions because, again, we use the tax code to find out how we can apply it to your situation.
Love it. Love it. Love it. So first question, are you still helping people with PPP loan fraud? And let me change the word of that. Not fraud, but PPP loan, like.
Yes, I am.
Okay, you are.
So I'm not working with anyone who committed any kind of fraud. However,
I'm glad you cleared that up.
Yeah, I'm not working with anyone who committed any kind of fraud. If you did not actually qualify for the PPP, then I am not someone that can help you. However, if you did qualify for the PPP and maybe some of your records are just unorganized, I can help you with that. If you are still trying to get repayment forgiveness, I can help you with that as well.
Perfect. That's why I was going with that. I'm like,
yeah.
before y'all have to put your hand behind your backs and let the cops drag you off, she can help you. That's what I wanted to point out. That is huge, huge, huge. Any other tax implications that we should be cognizant about? We can't file for dogs. Sorry, y'all. We can't file for pets as much as you love them. There's changes to the tax standard deductions and Cash App, Zelle, PayPal. They're reporting it all. Anything else that you wanted to touch on that we missed, that we should have asked, that we should ask?
So Congress is actually in the process of going back and forth on whether they're going to bring back that advanced child tax credit, like we saw in 2021. So they're in talks with the Republicans about that. That is a possibility that it will pass. It looks like it is going to pass. So that'll be a bonus when you go to file your taxes this year. And then again, we also don't know exactly if it's going to be retroactive to 2023 or whether it's just going to apply to 2024 yet. So that is something to watch out for. Also, the flip side to that is that corporations are asking for additional credits and things like that as well. And that looks like it also might pass. So those are some things to be mindful of this year. And as I always like to tell everybody that I speak to, like, ultimately, even when you're dealing with a professional, when it comes to your taxes, you are the one that is responsible for that tax return. Despite a professional preparing it for you, you are responsible for it. So everything that goes on there, you want to make sure at least you have a basic understanding of what it is. And probably sometime in the future, I am going to do a YouTube video or something on how to read a 1040 tax return or how to read tax returns, period. for the everyday consumer, so for the everyday taxpayer.
Love it, love it, love it. This has been absolutely phenomenal. I love this. I love what we do,
I
Karmea.
do.
This is so dope. This is so dope. Miss Israel, you are incredible. You're a phenom. You're changing the world. You're keeping people.
Trying.
She's funny, y'all. If you all have not found her on Facebook or her company, she is absolutely the real deal. She's real. She's real with you. She keeps it real. She doesn't sugarcoat nothing. She gon' if you walk into her office and you're doing some stuff, she gonna tell you you're going to jail, and she might even snitch on you. But she keeps it real. She keeps it real.
It just depends what it is, you know.
She keeps it real. Super down to earth. I have known her for several years now, and I couldn't be prouder. She and her family are incredible. How can my audience find you? How can we find you? How can we connect with you, grow with you, and stay out of jail and stay abreast of all these changes with the tax law?
Yeah, so I'm on TikTok and Instagram as The Modest CEO. I'm also on Facebook at Israel Lee-Aura.
Yes.
You can find my business page at the Benjamin Wolf Group on Facebook, Instagram, and yeah, that's it.
Check her out. Check her out. She's phenomenal. Like I said, follow her. Follow her. Her company is legit. She's legit, and she's doing big things. And she's helping us get to a better tax strategy. Karmea, you got anything for the audience? You got anything to say?
Oh no, this has been very informational, especially with us coming up on tax time. None of us want to be locked up by 2025, so get it together.
That is right.
No, I have nothing else to say, but you guys take care of each other, watch your finances. You know, if you need the help, she's someone who can help. And I'm pretty sure if she's not able to help, she's able to direct you to someone who can.
Absolutely. Yeah.
Facts. Big facts. Super dope. Super dope. Well, we gotta let Miss Leora go. She got a busy tax season. She got many more taxes to help people with, keep them out of jail, and she got a family, y'all. She's incredible. Like she said earlier, 10 kids. That ain't easy. Incredible family. Her husband and her are doing it. Her husband and her are goals, y'all. 50 acres of land they just bought. My mind is blown away. That's huge.
Still can't believe it. It's been 3 years, and I'm still every day like, wow, we really did this. We're really doing this.
Oh my god.
So yeah, doing our homesteading thing. So yep.
Y'all got chickens? Y'all got chickens?
Oh, we have tons of chickens.
Goals, relationship goals, y'all. Connect. Get on the page. Get with her. She is super, super dope. You won't regret it. So we gotta let her go. Like we end every show. Take care of your friends.
Y'all.
Take care of your family, and always take care of business. This is your favorite host, Karmea Wells, the unorthodox Southern Belle, Marcus, your favorite gentleman, and the incredible, the amazing, the super fragilistic espialidocious Miss Leora Israel signing off. Love you guys. Bye.